In October of 2020, I made a video called Insane New Growth Stock to Buy Now 25x Opportunity. I'll just tell you right now, that stock was Celsius Holdings, ticker CELH. Well, today I lay out how Celsius can in fact 25x from when that video was posted, or was this just another one of those naughty clickbait titles?
You naughty, naughty, you teasing me, you naughty, naughty.
Let's do it. What's going on, everybody? I need a haircut, and today we are talking about some insane new numbers, projections, business developments, and much more to cover for one of my favorite stocks, Celsius Holdings. Give me the format. First, a bit of background on why I initially bought in, if my thesis has changed at all, and if everything played out as planned or not. Then we'll cover some very important recent results, marketing and product updates, and also a red flag that you may want to watch out for. So if you're already invested in Celsius, this video is still very valuable. We'll also review my financial projections and shocking analyst revenue projections that have changed a lot throughout the year. And finally, is it actually possible to 25x, and a bit of valuation work / what I'm doing now with my position. And I know that sounded like a lot, but don't worry, I spent over 15 hours researching and writing this video alone, so it should be very smooth and very digestible. If you wouldn't mind hitting that like button for me, it really appreciate it, genuinely. These videos do take a lot of effort, but I love doing it for all of you. And subscribe if you're new here for more content like this. And as a thank you, here's a photo of a Shiba Inu in a field of flowers. So if you're already familiar with Celsius, you can skip to this timestamp right here, so you can skip the recap. But if you're new to the channel or new to the stock, here's a quick debrief. Celsius is an energy drink company that provides a healthier, more effective alternative to the likes of Monster, Rockstar, Red Bull, Bang, etc. And before you say I'll never invest in an energy drink company that's so boring, don't forget that they're expected to grow by 70% in 2021, and Monster Energy has actually been one of the best performing stocks in the stock market for a while. Not only that, but food and beverage stocks can be a great way to diversify perhaps a tech-heavy portfolio. So since buying in October 2020, we've seen a 3x in stock price, or over 200% gains for those who invested. But I've also added to my own position over time, and now I sit at a cost basis of about $28.47 per share. And it is by far the largest holding in my portfolio. So yeah, big fat disclaimer there, I obviously do own shares of this stock. Now, for some reason, some people think I'm sponsored by Celsius, but I want to make it explicitly clear I am in no way sponsored by Celsius. Someone's probably going to take that a little too seriously, but all jokes aside, and in all seriousness, I would never do a sponsored stock analysis video. There's no integrity in those videos, so it's really a waste of a video. It doesn't make any sense, and I really value my relationship with you, the viewers. So I genuinely think that Celsius is a good company, and I use their product on a regular basis, and let me explain why. So not many of you may know, but I actually rowed for 3 years, and having played many sports beforehand, rowing is probably one of the most physically demanding sports I've ever played. I was fortunate enough to place on a national level alongside my boatmates back in 2018, coincidentally almost exactly 3 years ago, and it was not uncommon for us to do at least 60 minutes of rowing, or what's called steady state, at a given practice. What I'm trying to say with all this is that in those 3 years and the years since, I have tried a lot of different energy drinks, and Celsius is actually the best tasting one in my opinion, and it works really well. And this is relevant to the video because that confidence, the fact that I've tried so many sports drinks and really like this one, it gives me more conviction in the actual investment that I'm making. I often use their drinks even today to fuel my erg sessions. I was actually a bigger consumer of protein bars though. One could consider me a connoisseur. And they actually just released their fast protein bars here in the US that they had already been serving over in the Nordic region through Funk Foods. So I had to order them right away, try them out for myself. I'm going to share my thoughts on these later in the video, but definitely a big growth driver for the company. Switching back to investing now, my original thesis is as follows. First was the product, which we just talked about. It tasted better and worked better than anything else I had tried, and it had no crash, no jitters, and it was usually the cheapest option wherever I looked. Secondly, I do see a secular trend for energy and functional drinks and healthy alternatives to both. Nielsen data shows that energy drinks are the fastest growing segment of the beverage market. Another report emphasizes a shift within energy drinks to plant-based, natural, and energizing drinks such as Celsius. And it points out that energy drinks have outperformed soft drinks every year for the past 5 years. This can actually be supported by a quick Google Trends search where we observe searches for energy drinks steadily rising and sodas staying pretty much flat. No pun intended. Get it? Because they're bubbly. Third was simply their financials. Great balance sheet, great revenue growth, and strong international expansion opportunities and product portfolio expansion opportunities. Also, the company was just recently profitable. And finally, at the time of my initial investment, the valuation was still okay. Celsius was trading at roughly 14.8 times revenue, while Monster, a similar competitor, was trading around 9.8 times revenue. And I felt the premium here was worth the investment in Celsius. Now, let's get into what has changed since October 2020, new updates, and potential red flags as well. We'll start with how they're growing, then product expansion and competition. On their Q1 earnings call, Monster Energy actually referenced statistics from Stackline, which tracks energy drink sales by Amazon. And Celsius grew the second fastest year over year and took the most market share from the major brands. But this is a lot of words here to take in, so I made this graphic just for you to better visualize this data. We have the major brands on the bottom, on the x-axis, and on the y-axis to the left, we have year-over-year percentage growth for sales, current percent market share on Amazon, and also how much did their market share grow by in the last year. The green means that it's the best of that category, and gold is second best. And now that I think about it, gold probably makes more sense to be first, but you know what? We're going to roll with it. So for year-over-year growth in sales, Bang actually takes the number 1 spot, and Celsius is number 2 with an amazing 265% growth year-over-year. In terms of market share on Amazon, Celsius is again in second, still far behind Monster, but now actually ahead of Red Bull, a long-standing competitor. And finally, how much did their market share grow by? Celsius grew their market share the most by 4.5 points. Bang comes in second, and Red Bull actually lost market share. All in all, you can see how Celsius has performed exceptionally well on online Amazon sales. And keep in mind, this data is presented by Monster Energy on their conference call. So this data is actually supposed to make Monster look good, not necessarily Celsius. But it is my job to tell you all sides of the story. We need to look at it from every angle. So what I just discussed with you was, again, online Amazon sales. But if we look at the US market share as a whole for the energy beverage market, not the world, but just the US, Celsius represents just 0.7% of market share compared to the very dominant 41.7% share for Red Bull and 31% for Monster. So they're killing it on Amazon, which does tell me there's a lot of customer loyalty. You know, people aren't really going to the gyms quite as often right now, not really going out for grocery shopping. Things are kind of getting back to normal, but they still want their Celsius, so they're going online to buy it, and usually you have to wait at least a couple weeks for that Celsius to come from Amazon. But there are still these small fish in the big pond in the grand scheme of things, but again, to me, that's just more growth opportunity. That's actually what probably allowed them to grow their revenues by 77%. So naturally, you might want to ask yourself, what is allowing them to gain all of this traction? My guess is it has a lot to do with their influencer marketing. If we take a look at their financials from their most recent report, we see that selling and marketing costs increased by roughly 59% year over year, which honestly is kind of a lot. But again, revenues outpaced that, growing by over 77%, meaning their marketing dollars were pretty well spent. I would be worried if S&M costs outpaced revenue growth, but it did not. And the crazy thing is, with a little imagination, we can actually see their marketing campaigns kind of play out. Right at the end of December, Celsius sponsors Dustin Poirier, who goes on to beat Conor McGregor. Boom. Searches for Celsius drinks start popping up right around December, January, and I have DP there for Dustin. Then in February, they sponsored 2 Tampa Bay Bucks who end up winning the Super Bowl. Here's Scotty Miller drinking some Celsius. Then boom, you see another uptick in Celsius searches right around then and leading to the Super Bowl. TB is for Tampa Bay, of course. And most recently, I saw them sponsoring Pat McAfee. They sent him a Celsius fridge. And people I know who listen or watch the show say that they can't stop talking about how much they like both the drink and the Celsius team. By them, I mean Pat McAfee and his crew. Now, obviously, these aren't the only marketing campaigns that Celsius is running, but they definitely stood out to me. And if we look at the Google Trends, we can see a steady rise in searches, and it does line up pretty well with what we just outlined. However, although all of that was great, their revenue was great, they did have a pretty rough operating margin. Despite revenues jumping significantly, income from operations was actually lower than a year ago. And I'd argue that some of that has to do with increased costs of goods due to supply chain issues, and also the continuation, of course, of the aluminum can shortage, which I think are ultimately both temporary. Gross margin did drop to 41% versus 46% a year ago and 48% the previous quarter, as you can see here. But the reason that doesn't bother me quite as much is actually because management called this out in the Q4 earnings call back in December. They said we should expect gross margins in the low 40s for 2021 due to all the reasons I just mentioned previously. So they are actually keeping their word here. What does worry me a bit is the sharp rise in G&A expenses, 83% year over year to be exact. When looking at their cash flow statement, we can see that the majority of this increase can be attributed to stock-based compensation. This is when you pay your employees with stock instead of cash. And although it is technically a non-cash expense, it is still an expense to the business, which means it is going to affect that operating margin. So when comparing Q1 2021 versus Q1 2020, stock-based compensation is up almost 2.5 times. This is a graph I made to help visualize the sudden spike in stock-based compensation. I don't think it's necessarily a really bad thing because rewarding employees with stock can help them be more aligned with the company and be a motivating factor. But I also don't want this to just start running like crazy and just destroying their margins, which I'm sure won't happen, but I am going to be keeping an eye on this in future quarters. Another thing that also caught my eye though, this one's a good thing, is their recent release of a new product. Literally within the last couple of weeks, again, they brought their fast bars to the United States. These bad boys have apparently been selling pretty well over in the Nordic region, and they've brought us cookies and cream and salted caramel peanut butter, which I immediately bought and tried for myself. I'm usually either a builder bar kind of guy or a Fit Crunch kind of guy, and I was kind of skeptical that these would stack up. The cookies and cream, which I have right here, honestly, it does taste kind of like a regular protein bar, and it has that aftertaste that tastes a lot like just vanilla whey powder. Whey powder is like a protein powder, but the salted caramel peanut butter was actually really good. I did actually like that one. I think that one's probably going to be added as a staple into my protein bar repertoire. That rhymes. Wow. I don't have a salted caramel peanut butter to show you because I ate them all. I'm sorry, but I am looking forward to seeing how these impact their overall revenue in the coming year. I'm very excited to see what they can do for the business. And before I lay out the road to 25x, I do want to talk about one more thing, and that is competition. Because the fitness space is obviously very, very competitive, and I'm always on the lookout for any energy drinks that I haven't tried yet. So far, the only one that can actually stack up against Celsius, in my personal opinion, in terms of taste, is called Adrenaline Shock. It's a tad too sweet for me, but what makes it even more of a threat is who's behind it, and that would be Lance Collins. He also founded Fuse, NOS, which was bought by Monster, and Core Water. Adrenaline Shock is also partnered with Keurig Dr. Pepper for distribution, and it could become a force to be reckoned with. I will also mention The Rock's ZOA energy drink, but only because The Rock is such a fantastic marketer, and he said he'd find me if I didn't include him. But in terms of actual taste, I am not sure ZOA can compete. Let's now take a look at my nearer term projections and the analyst projections as well, which have changed a lot this past year. This is a message that I sent to investor community, my Discord group, also linked down below if you'd like to join, and I posted my own projections explaining why I thought Celsius should easily see 52% growth in 2021. I went back to several of their annual reports and looked at the revenue breakdown by region. I did the same thing with their most recent numbers, and I was able to come up with more conservative estimates. My original post projected 52% very confidently, but the numbers were actually even better than I realized, and I revised them into something more along the lines of 63% growth in 2021. And by the way, we actually did have a live lesson in investor community taught by Nick, a full-time performance analyst, teaching you how to build something like this if that's what you want. Again, link is down in the description or pinned comment. But the other attached photo in the Discord post was the analysts' expectations. At that time, it was 49% growth for 2021, and they were expecting even less than that, roughly 38% at the start of 2021. Now, analysts expect 72% growth for Celsius by the end of this year, which is nearly double what they expected at the start of the year, and even more bullish than my numbers. That tells me either Celsius is innovating very, very quickly, or it's constantly beating everyone's expectations, or both. And that is a company I want to be invested in. Now comes the part we have all been waiting for. I know you've been waiting for this. Can Celsius actually 25x? And what am I doing with my position? I believe I have built a pretty logical case on how Celsius actually can 25x from when I first mentioned it on this channel. First, we need to establish that Celsius was at a market cap of 1.53 billion at the time of my first video claiming this 25x opportunity, which means we need Celsius to hit 1.53 billion times 25, or a $38.25 billion market cap. So that's our target. Remember that. To get there, I want to look at Monster Energy. Monster historically trades at a price to sales of roughly 9 or 10, as we can see here, and I believe Celsius will warrant a much higher premium than Monster for at least the next decade, simply based on higher growth. And maybe not too much higher, but I'd expect Celsius to trade at least 10 to 12 times sales. So if we assume a price to sales of 10 for Celsius at a market cap of 38.25 billion, that means we would need $3.825 billion in sales to then justify that market cap, because we divide the market cap by 10. If we assume that Celsius at this target $38.25 billion market cap is trading at 12 times revenue, which means investors have placed a higher premium on it, then we would need $3.18 billion in annual revenue for Celsius to justify that market cap. Hopefully this makes sense. If it doesn't, please feel free to rewind. But what we're doing is using the equation for the price to sales ratio, which is market cap divided by revenue for a given year equals PS ratio. We're giving a preset assumed price to sales ratio of either 10 or 12, and we're assuming a market cap of 38.25 billion, because that would be 25x the original market cap when I made my first video. And once we have those two numbers plugged in, we work backwards to figure out what is the annual revenue required to make that equation make sense. So right now, Celsius is expected to generate over 224 million in revenue by the end of 2021 for this year, but let's be conservative and say they produce $200 million in revenue for 2021, which they'll clearly blow away. We can see that Monster was at $200 million in revenue in 2005 and reached $3.7 billion in sales in 2019, or about 14 years after. That $3.7 billion in revenue is where we need Celsius to get to in order for our 25x to roughly play out. But I'd say 14 years is the longest it would take for Celsius, because you can see Monster's compounded annual growth rate on the graph below. I know it's a bit hard to read, but Monster's growth peaked in 2005 at nearly 100% revenue growth. Then over the next 4 years, its CAGR dropped towards 10%. It pretty much stayed there ever since, except for a small jump in 2012 to roughly 30 or 40% revenue growth for that year. Celsius has shown it's not afraid to innovate, it's not afraid to expand its product portfolio beyond drinks, and it is not afraid to make acquisitions. So for those reasons, I believe Celsius is going to take a much longer time to plateau like Monster did in terms of growth. For example, I don't see anything other than drinks in Monster's product portfolio, whereas Celsius is already moving into bars in the US. And I could honestly see Celsius moving into more things revolving around fitness, such as maybe even apparel or snack packs like on the go or gel sticks or anything of the sort. So a quick recap, we found that in order for Celsius to 25x from when I first posted my first video on it, it would have to have a $38.25 billion market cap. And in order for it to trade at that market cap at a price to sales ratio of 10 to 12, it would need anywhere from 3.1 to maybe $3.7 billion in revenue. And in order to get to that point, it would take about 14 years based on how long it took Monster to get from where Celsius is now to $3.7 billion in revenue. If it didn't make sense, again, feel free to rewind. But now we're going to take a look at some other alternative scenarios that could also get us a similar timeline. So again, starting with $200 million in revenue, which they should blow away in 2021, if Celsius were to grow at 30% revenue annually for the next 11 years, which I honestly think is somewhat doable given their growing product portfolio and massive runway, it would get to $3.5 billion in revenue in that time. If we change it to 25% annual growth and bring it down a bit, it would take them 13 years, assuming they're starting at $200 million in annual revenue. Again, they'll probably do more than that this year. Another site shows that analysts expect roughly $600 million in revenue from Celsius by 2024, which is over a 2.5x in revenue within the next 3 years. And if we take that $600 million and we see an annual revenue growth of 25%, it would take another 8 years from 2024, aka until 2032, or about 11 years from now, to reach $3.5 billion in revenue. So we just walked through several ways that tell us it should take Celsius roughly 11 to 14 years to reach $3.5 billion in revenue. And if we slap on a price of sales of 11, that's a $38.5 billion market cap, or a 25x from the original video. Now, if we're talking about going from today's stock price with a market cap of $5.64 billion, that would be about a return of 7x, or just under 800% if it were to get to $38.5 billion in market cap. With all that said, we're in a bit of a pickle here in the shorter term, with Celsius at near all-time highs and its price of sales also near all-time highs, trading at 38 times revenue. Celsius is by no means cheap right now. I already know someone's going to comment about their PE of 710, but this is a high growth company that just recently became profitable, and their focus right now is not on profitability, as it's nowhere near maturity, which is why I use the price to sales ratio in this case. But again, even that is making Celsius look like it's trading as a high-tech AI cloud software play. Now, because Celsius is by far one of the biggest positions in my portfolio, and because it is clearly sort of getting ahead of itself fundamentally, at least if we're looking at it in a 1-year timeline versus a decade-long timeline, and because it's a very volatile stock, I did trim some of my position of Celsius recently. I trimmed it by about 4%, which means I sold 10 shares out of my 250 share holding. And I showed you my position at the beginning of this video. So I sent out a real-time sell alert to everyone in the investor community, and I was actually tempted to also sell some covered calls, meaning I would use my 100 shares or 240 shares as collateral and actually sell and write some calls, collect some juicy premium, but I did not want to risk getting assigned because I do not want to sell these shares, and I do not want to try rolling out calls on Celsius, which is an absolute beast, and you really don't want to be on the wrong side of the trade when it comes to this one. Celsius does remain one of, if not my highest conviction position in my portfolio. I just want to make sure I'm managing my risk properly, as it is a very volatile stock, like I said before, and it was getting pretty close to 15% of my portfolio. Now, if it continues to skyrocket in the short term, I'm totally okay with that. I'm happy with the decision I made. It was logical. It made sense with the facts I was given at the time. It's always going to be 2020 hindsight. And if it never comes back down to the price I sold it at, I'm also okay with that. I realize the market can sometimes be irrational, as it often is, and I want to make sure I'm still making logical decisions. And of course, if it drops below the price I sold it at and it is coming back down to earth to a more reasonable valuation, I of course will become a buyer yet again. If you don't have any shares of Celsius right now, I would just put this on your watch list and start doing your DD. My videos are meant to be a launch pad for you to do your own independent due diligence, and if you want to learn how to do that, again, check out the link in the description below. I don't mean to plug it so hard. It just comes out naturally because we are really passionate about teaching people in there. But yeah, maybe dollar cost averaging is a good way to kind of get your toes wet. Just buy one share even if you just want to have some skin in the game, but definitely think things through and be patient. So with that said, again, if you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, check out a quote of the day. You might just learn something. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all that good stuff. If you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous. Oh my gosh, that was a long one.